Okay, it looks like we are live. Hello, everyone. Also, if anyone in the YouTube chat can just respond ASAP that you can hear us, that would be greatly appreciated. But I am welcomed here today. Luckily, Sylvia Jablonski decided that she did want to come back to our YouTube channel, which is awesome. Thank you, Sylvia. So we're going to do a community interview. She was kind enough, to take more questions from our community. But first off, for those of you, I guess, who may may not be familiar with Sylvia, most of you, obviously, she does Defiance. Sylvia, did you want to give like a brief overview of your history, maybe prior to Defiance, what you're involved with in the investing world?
Yeah, sure. I'd be happy to. So, prior to Defiance, I can start from the beginning, basically, just always an avid, markets studier, learner, just always had a huge interest in that. And so, my background is pretty much finance, econ, MBAs, masters, all that kind of stuff. I always really loved learning about markets, and started, trading as a young preteen even. So it's always just, been my passion. Post college, I did kind of the investment banking route. So I worked in global equity derivatives, and from like more or less the large beginning of my career had to do with swap sales trading. So, working with like hedge funds and ETF companies similar to ours, or similar to, Direction, where I also work, just managing their day-to-day trades and helping them get exposure to things, like basically helping them with the nuts and bolts to build and manage their ETF products. And then other things too, just kind of like Delta One trades with hedge funds in particular. That was kind of like where I started. And through that, I met Direction, where I spent, over a decade working with levered and inverse ETFs. I was doing swap trading for levered and inverse ETF products, and I joined that firm in early 2009. So, kind of like around the heat of the financial crisis, and stayed there, for a really long time, working on, helping come up with levered and inverse ETF products, the research, the capital markets side, educating clients on them. So at this point, a good chunk of my career has been in ETFs. And little fun fact, the chairman and founder of our company, he and I worked together at Direction for about 5 years or so. And so that's, Defiance was kind of born, through our relationship
there. Nice.
Yeah.
And before we pull up the community questions, I know since we last spoke, Defiance has launched 3 different funds, 2 income funds, being QQQT and USOI. I call it USOI. And then we have Urax, which is the 2X leverage fund of Uranium. I didn't know if you want to give a brief overview of each before we begin.
Yeah, sure. So QQQT is essentially, the sister product.
It's hard to say, isn't it? Whenever I talk about it, I'm like,
I've actually never heard anyone call it USOI before. I had to think for a minute, like soy. Wait, yeah. Soy product? What's a soy product? I don't remember that. So yeah, it's super interesting to see how some of these, like, we've had
to get fun with the names,
Yeah, people have a lot of fun with it. So QQQT is kind of this brother or sister product to SPYT. So what we're doing there is we're selling covered credit call spreads to generate income on, a monthly basis for distribution. And the idea there is, for those of you who are familiar with JEPI, IWMY, and QQQY, where we essentially sell, slightly in the money, 0 DTE, 1 DTE puts to generate income. And we have kind of, bigger monthly dividend payments, arguably. But, a little more risk exposure to the underlying index. And, in this case, in the case of the target income funds, what we're doing is we're selling covered call spreads. So you're getting that daily income through the sale of covered calls, but you also uncap the covered call, kind of thesis, so that we can capture more upside. And so this is for the crowd that wanted that more stable NAV, more upside appreciation of the index. And they like that sweet spot of 20% on a dividend. So that's where QQQT lives. And yeah, it's, it's another type of income product. I think with oil, the idea there was, we have geopolitical issues, Russia, Ukraine. It's another, it's another type of opportunity to sell options to generate, premium. And it's certainly done that. There's a bit of volatility there. So we would expect that that would be probably more along the lines of the initial product suite in terms of like a higher type of dividend that we're aiming to achieve. And then for uranium, it's pretty easy. It's just 2 times daily performance of uranium on a daily basis. So that's more for, active traders, high risk appetite. That's not certainly not an income play, right? That's very much, momentum, and, wanting that extra beta exposure to the underlying theme, which is uranium.
Does it pay a dividend? Some of these double leverage funds do.
Yeah. I mean, but they're not meant for that, really. So if the underlying tool that you use in a levered inverse ETF, so for example, if you have a 2 times S&P 500, you're going to get 2 times the dividend, right? Yeah. Well, depending on how the issuer structures their, their swaps and all that kind of thing. But yeah, I mean, you would get dividends if dividends were paid. So there was no distribution, for example, last month for uranium.
Okay, but there will be, or
so if the underlying asset, which is URA, pays a dividend, then this would pay a dividend.
All right, then I have another question. Sorry, community, I'll get to you. But TSLL pays a dividend, right? And their underlying is Tesla. How are they able to pay a dividend? I believe there's a Direxion one, right? Yeah,
it would be the same as us. So if we hold the underlying ETF, or if we hold, whatever it is, whatever the underlying equity or ETF is that's in the portfolio that you're leveraging, if you receive a dividend, you pay out the dividend. Yeah. So basically, if URA, so we're 2 times levered URA, right? And URAX is our ticker. So if URA pays a dividend, we're paying a dividend, and that's more or less how it works.
Okay.
So and any levered and inverse ETF product out there that, to your point, like if Tesla pays a dividend, that product would have to pay a dividend, basically.
Yeah, but they don't, which is weird. I don't know how TSLL does it, but we can move on. First question is about t-shirts. Everyone loves t-shirts. How can we get some Defiance t-shirts? I assume you have a merch store, right?
We don't have a merch store.
Oh, you don't? Okay.
No, we don't. We're still, startup. We're not at the point where people have been banging down our door for t-shirts. We have received a lot of interest in QQQY hats. Everyone loves the QQQY trucker hat, but right. I will bring that back to our chief marketing officer, and I'll let him know that there's interest in merch.
Okay. And this is already coming up. So the IWMT, I don't think you could talk about this really, but
yeah, IWMT is filed. It's effective. What I can say is that, we talked about this offline a little bit with the income products. We're really letting you, the audience, dictate. And I think, we see that through trade activity. So for example, we launched SPYT by itself, and we didn't launch QQQT or IWMT. We wanted to wait and see if people, wanted that product, if they cared, basically, if they liked the idea of the target 20 income funds, and they certainly did. It's seen a steady growth, and so the next fund is now QQQT, and we'll do the same thing. If there's interest here, then we would be likely to pursue IWMT. We'll let the market and the people speak.
Yeah, I know. I recall you saying the sweet spot was 40 mil for QQQT to launch, right? And I think QQQT was launched maybe just before that. And actually, I'm looking, SPYT is 40 million now.
Yeah, it's a little bit. Yeah, it would probably be a little bit less. You do get a little bit of economies of scale in this thing. So it would be, but it could be. I think we don't have a hard and fast rule. I think if QQQT had 20 million, 30, then we would think okay, that
may be enough.
Yeah, we would think people are interested in this product. Let's put another one out there. If it trades, nothing, then I mean, we've closed ETFs, right? Because they've had no interest before. We've had ideas that we thought were awesome, and others didn't agree, and so we have to close our losses.
Yeah, TRES is not growing. I don't know. I'm sure you see that. So that may be on the next, on the hook, huh?
Can't comment on anything like that,
Yeah.
but
Yeah, because I always update all the funds, and everyone's growing a little.
yeah,
Everyone always surpasses poor Tress. They're always
yeah,
left behind.
yeah, yeah.
All right, here's another question. Are there any plans to create an S&P 500 and NASDAQ Iron Condor ETF? Some options like it would be great to generate extra income playing both sides of the market.
I will write that down and look into it. It's not something that it's not something that we have on our drawing board right now. We have a couple of ideas that we're, talking about in the realm of income and broad-based index exposure, but it's not one we've looked at. But we'll definitely take a look. We'll discuss.
Okay. Are all of your ETF distributions unqualified dividends?
So again, this is just like me being regulated and not being able to comment on any kind of tax related questions. But usually these types of products do not pay qualified dividends. But best to consult with your see how your trading platforms reporting it.
Yeah, and most of them, to Steel Horses, you can go to their website. They have 19A1 notices too.
Exactly. Yeah. That's a great point. So if you go to our website, because I've heard that it's a little bit tricky to find, if you just it's actually not. It just pops up on the bottom of the page. If you click on the ETF and scroll all the way down to the bottom right of the page, you'll see those distribution notices posted there.
Yeah. Yeah, it's actually it's on the right hand side.
Yeah,
I know it's an estimate anyway. So.
Yeah.
Okay. All right. Also from Steel Horses, do your fund managers and traders cover multiple ETFs? I guess. Yes. So does one person work on various ETFs?
Yes, but the people who work on the options ETFs, I think you've spoken with them before, but like Jay Pestricelli, those are very much, options guys, and they have options expertise. And so they're the ones trading the income funds. That would be different than somebody who's perhaps trading the levered inverse ETFs, which are just, straight equity trades and swap trades, things like that.
And even those, you have.
Like he does yield max than us, for example. So
thematic. You have thematic ETFs as well.
Exactly. Yes, we have a different trading group for that, but then trader trades all of those. Yeah.
I had this question came up when I interviewed Jay. Will Defiance consider a daily distribution for a future fund? If not, what are the barriers? I think customers would pay an extra expense ratio to cover the extra admin costs.
So it's something we're keeping an eye on. We know that there's one competitor out there that does that. To my knowledge, our performance has just been pretty good in terms of like where we're at and the way we're doing it. So, we'll have to look at that over time and just see how it shakes out in terms of total return for the fund and, how it works. But, I know Jay has some strong opinions on that. Happy to, if you want to voice those, you're welcome to. But yeah, I think we're doing it a little bit differently. And I don't know what the spot is yet, right? And it's the same for levered inverse ETFs. We're always debating, like, is it weekly? Is it monthly? Is it daily? What's the best way to do it? And for some of these funds, it's, you kind of have to run them for some period of time to really see what the answer is. Because the back tests with selling daily, ODTE, 1DTE option, like it's really hard to do back tests on these things. You don't know like what the volatility was on that particular, it's just not like a clean historical comp, in my opinion. Others may disagree, but I haven't seen a great historical comp on that.
I figure, a week would be even a stretch, right? So daily, I don't know. To me, it just seems not worth it, from an administrative standpoint, and just trying to pay the right number, unless it's like a straight up income fund and you're programmed to pay a certain amount, but I don't know.
Right. But then you're kind of like paying something that you don't even know that you
have, right?
Right. So.
Yep. Return of capital more. But what are the, all right. This is
capital would be tricky.
All right. Kev B, she's not involved with yield max, so we'll skip that one.
The longevity goals are to grow slower than, no, just kidding.
Yeah.
They have great prices too.
Yeah.
Only 20%. So we think that, like, when you kind of research these things and try to figure out the best secret sauce here, obviously the higher distributions lead to more NAV decay. And 20% was a sweet spot where if you kind of looked at what we were modeling, you're getting some upside of the S&P 500 and the NASDAQ with like a arguably very high dividend distribution per year. And so it was more or less just like the sweet spot for less volatility in the NAV and a higher monthly target or annualized target income of 20%.
So do you think you're being less aggressive for that yield for QQQT or more aggressive for the yield on SPY-T, since they both have 20%, and typically the Q is more volatile than the S&P. So
I think the goal with this suite would be an IWMT is filed the same way. Like we're really
20%. We're
trying to target a 20% dividend.
Okay, so that one, so most of it, I know Jay mentioned, to essentially keep the capital, growth as well. So for the Russell's even more volatile than the NASDAQ, I believe. So that could even have more growth. But Russell, I know like IWMY is crazy, it goes up, it's like everywhere. But so is USOY. I know you don't like that name, but USOY is kind of crazy.
Oh no, I like it. I don't mind it. I call it USOY, but I actually like tickers that sound like a word. They're easier.
Oh yeah, USOY is easier to say, and it's kind of fun. This is from Freddie. From an institutional standpoint, what are the top 2 metrics you look at to gauge a fund's long-term success? Yield on cost, return on investment, etc. Depends on the
performance of the fund itself. In some cases, you might have cases where you have something like hydrogen that is a thematic that might take a really long time to pay off, or uranium, you need like news and a particular event, like when you heard about the bans on uranium, the price obviously skyrocketed for that short period of time. So for some funds, it's performance over a longer period of time. But for most funds, it's good performance. It's assets under management. So if people are actually buying it and trading it, and that's going in the right direction, that tends to tell us that the fund is probably here to stay.
Yeah.
I think, to answer the opposite question, like if a fund doesn't grow at all and there's no volume and no one cares about it, we would probably deem that fund to be unsuccessful and probably wouldn't have very high hopes for it over time.
Yeah. What is your most successful fund from, like, I guess in the shortest time frame? Was it QQQY?
It was QQQY. QQQY had the fastest growth.
Had the fastest growth of it. It's probably one of the top. I forget what the number was. I saw it on a list of like one of the Bloomberg guys put out a list of this, but I think it was one of the top 10 fastest growing ETFs in a period of time that it grew. That is now kind of like slowed down and leveled out and whatever. But within 3 months, those 3 funds had $500 million in them. So there was a lot of interest in that. Yeah, they're still the biggest of the bunch, but I think like there's a lot of love for SPY-T and QQQT.
There's a lot of love for SPY-T. Yeah, and it's so funny because it changes. There was a period of time where people were kind of knocking. Everyone was very excited about QQQY, and then they were kind of like knocking it. But now, now they're pulling up the performance and comparing it to some of the other income paying funds out there. And, so now it's actually picking up steam again. It's people are like, oh, okay, I see. It's doing, it's doing its thing. And so it kind of changes. IWMY was definitely like the hot one for like a good couple of weeks there. Then now it's SPYT and, QQQY.
Yeah, people just abandon them. A couple bad weeks or a bad month, and it's just like, oh, it's so terrible. And then but
yeah, I think we've noticed this, that it's the day that we make the announcement, we see so much activity, like right around the week before and the week after. We see so much, and it's just so interesting because like USOI, I'm gonna call it USOI now. USOI paid a great dividend, and I don't think anybody was paying that much attention to that ETF, and all of a sudden now that one's on the radar. And IWMY, there was less volatility, right? So there was a lower dividend. I mean, lower, still a massive dividend, right? But compared to the month prior. So I think I think the stability amongst the div distributions and the announcements will guide, be the guiding light. But the feedback we get from both institutionals and retail clients, people love SPYT, and they want more of that. Like we get so much direct emails to us about loving that fund. So it's good to see.
Because they want the yield, but then they don't want it because of this, and then sometimes they want it again.
Yeah,
people are flip-flopping to from what I see. But USOI is like the new, they say they call it the new pretty girl in the room, right? $1.24, right? Put everyone to shame last month. So that was unexpected.
Right.
I knew it would be decent because I know their IV is pretty high, but I didn't expect that.
Yeah, it's so funny because for us, like we thought that one would generate so much buzz out of the gates just because of everything going on between like Middle East and Russia and Ukraine, just the theme of oil and then getting an additional piece of income on top of it. But it really took that first distribution to get people excited about it. So
yeah, exactly. I had to wake people up. So the yield is actually, what was the yield? Yeah, so USOI I showed on declaration date at least 74.8% yield. IWMY 57.6%. So it killed them. All right, let's go to Jonathan. Is there a way to automate the type of option trades you make if an individual trader is willing to do the same type of trades you do? Is there a I guess he's trying to ask if, I don't know which fund, but is there automated platform
or something? So it's actually this is an actively managed fund, right? So they are looking for similar things every day, but there is active management. There's, somebody's looking at this every single day and making the trade. So it's not kind of like autopilot.
Yeah. Exactly.
Yeah. I think you could try to build your own thing. You could build your own.
Yeah, and I'm sure someone's selling something out there like that, right?
Yeah, for sure. I know a lot of the like options day traders and things like that. People we talk to who are stay at home investors, like they've built their own models and stuff like that. But I don't know of a Schwab or a Robinhood or whatever. I don't know of a platform like that lets you do it.
Yeah. Any fund which maintains the NAV share price? Well, SPYT and QQQT so far, right?
Yeah.
I don't know. What did you want to mention? Any of your others that don't?
Those two maintain the share price. And look, like when share prices fall when you can kind of see what's happened with some of the other income ETFs out there. When the share price falls to certain levels, you get reverse splits, and then so if they kind of get back to the NAV that you had before, they don't really change anything in your account, but for some reason people like them. Well, actually it's split. I shouldn't say everyone likes them, but it's split on people liking them. Lately, we've been, that's been brought up a lot. So it's not just about the NAV, right? It's about the total return. You can generate like whatever these numbers are, 70%, 60% of income on daily options. But then you also have the performance of the index. You have to add both things together, take into account, both positions when you look at your return. So, what matters is total return is what I would say.
Yeah. And that's the next question. How do you calculate actual return? I guess you meant total return given the NAV erosion. And I mean, it's basically add the distributions, right? I just add the historical distributions, into the share price and compare it to the inception price. And to me, that's the total return.
That's the best way to do it. Yeah. I mean, it depends on what you're doing with it, right? If you just want the total return of the product, then like in the cleanest way, that's the way to do it. But if you want to know, I mean, this is probably obvious to everybody listening, but if you took that income and invested it in, you know, Nvidia or something else, and you know, like there's different ways to figure out what the total return of your actual investment portfolio is with the proceeds of the fund. But yeah, I mean, yeah, just fund performance, add the distribution back in, compare to inception. That's the best way.
Yeah. Yeah. And obviously with drip, it'll be much, you know, even better.
Yeah. Drip is even better. Yeah. Also, of note, we put a white paper, like a kind of a short version of a white paper on our website that talks about this in the nav. And we're going to have a bigger one coming too, but that's out on our website. So you can have a look at, you know, some of the topics that relate to the actual ODT options, you know, why the NAV decays, what does it mean? What is the actual total return? What does it look like on drip? There's a good white paper out there.
So that what you just said is something Redfish should probably read, because his question, he said, once he saw the NAV not recovering, he sold everything because my principal was sinking and numbers don't lie. But, you know, this goes back to look at the total return. What you did this month so far? Oh, what you did this month so far seems to resolve.
We didn't do anything different.
Yeah, you did the same strategy, right?
Yeah, it's just volatility is different, you know. So sometimes you get more divs, sometimes you get more ups. Like if the NASDAQ, you know, if these indices are just like flat or bumping up every day by a little bit, you know, but yeah, we don't do anything different. So
yeah,
the point in time that you're looking at is
exactly better. Yeah, things just have to work out. You know?
Yeah.
I always say, like, the worst case scenario is, you know, obviously if it tanks in one day, you're going to go down with it, you know, plus.
Yeah, you're going to go down with it.
Premium.
But a little less because you'll get the income.
Yeah, exactly. But then if it jumps up too much the next day, you're going to miss out.
You'll never outperform it. But, and that's worth mentioning, like we don't benchmark ourselves to, we don't compare QQQY to QQQ, right? We think it's an alternative income fund. We think it's a different beast.
Yeah.
You can compare it to the other, you know, income paying fund, like the JEPI, the QYLD, RYLD, like those are, you know, those are the types of products that we benchmark ourselves to, or that we compete with, I should say, not benchmark ourselves to.
Yeah, I think the T's and the T's and the Y's like kind of complement each other now. You know, so once you get the 6 of them, you know what people are going to ask for, right? A fund of funds.
Yeah, I know. Well, they already do, and then a leverage fund of funds.
Leverage. Well, yeah. I'm sure that question may come up. I don't know. Is uranium a good choice of a mineral stock? I don't know if you want to.
Yeah, I you know, kind of depends on your perspective and outlook for uranium, but you know, the reason we like it is it's
you chose it, so you must.
Yeah. We think that, you know, there's a supply and demand issue, right? There's more demand than there is supply. There's geopolitics. There's nuclear energy is believed to be the purest, cleanest form of energy, and you know, so uranium is a resource there. AI, you know, energy, like again, clean energy needs to power all of these data centers, AI, you know, Coinbase mining, all this kind of stuff. So there's so many different use cases, I think, for uranium, but, you know, nuclear clean energy, climate neutral by 2050, all this stuff. We just think that there's a big long-term story there.
Okay. Thank you. DIJ, what do you think about the near future of IWMY, for example, interest rate reduction and after that?
Yeah, so the interest rate, so the treasuries, I think you guys have seen how we kind of do this, right? So the cash sits in an account that basically gets that, you know, that like 4 to 5% interest instead of an S&P div yield or something like that. So you have this higher level of interest. So, you know, if you get a rate cut and some of those types of percentages get lower, that's where you'll see the difference. But, you know, we wouldn't expect that part of it to be so meaningful. The fund really generates its income and return from selling the 0 DTE options. The extra, you know, the extra little bump in cash that it picks up is a nice surprise, but it's not going to change the outcome of the fund. What would is, you know, if we have rate cuts and there's a massive decline in volatility, for example, or change in, you know, the stock prices themselves, that could impact the future of the fund. But
but it's still, when the rates are lower, it's still the same strategy.
Keep the same strategy. Yeah.
Here's a question on one of the other funds. Look at that. Defiance ETF QTUM has been doing fairly well, but has lagged behind VGT and QQQ quite a bit. Is it not capturing enough of the AI hype?
So I haven't looked at VGT, but I think it depends on what time period you look at for QQQ. The performance of QQQ, I think, has been, relatively astounding. It's been one of our top performing funds, as well as 5G. So I think we're doing the right thing there. What we do there is we capture AI, machine learning, and quantum computing. So we think that, when we launched this fund in back in 2018, when these funds came out, we were thinking about AI before ChatGPT was around, and 5G and quantum took a while for people to kind of find them, and AI became the newest craze. But instead of just giving you exposure to like the 5 top semiconductor stocks, which you get anyway, right? If you hold SMH or whatever, the Mag 7 or even arguably the top AI stocks, we wanted to capture the full ecosystem of AI. So again, like all of the names that are relevant to machine learning, to quantum computing, you have like a D-Wave and IonQ in there, Rigetti's in there, as well as NVIDIA, AMD, Google, HP, IBM. So we think it's a great fund. We're not looking to touch it. We're very happy actually with its performance, and we think it's got a lot of leg room, particularly after, people kind of figure out that you need supercomputing and data processing and quantum computing in order for all of this stuff to actually come to fruition in the next 5-10 years. So we're, super bullish that fund's built in a good way.
Okay. You said NVIDIA's in there, so you're good, right?
Yeah. Yeah.
Freddie, how would someone chart each fund's daily movement, not the stock, but the trades? Trying to understand how to track the success of each fund during the month to balance my portfolio. I mean, my answer to that is I don't track the daily trades anymore. I track the daily change in the price. So to me, that tells me the success of the trades for the day. I don't know if you have a different answer for that.
I would have the same answer. Yeah. I don't really know of another way.
Yeah. Because, I used to, I don't know if you ever see my older videos, but I was doing it daily, right?
Yeah, I remember because you were asking me about
Exactly. Yeah. Then I had you're like, why is he asking these questions? But yeah. No.
And I think there's some benefit to seeing everything, I guess, for the sake of hedging, but there's also, a lot of the data actually happens, they're doing this at the close, right? So a lot of the data is coming out later than you need it anyway. We wouldn't re-announce the trades.
So I don't know if you want to talk about the trades, what they do, right? Sell puts, expire following day.
Yep.
And you cash settle them.
Yes.
Like later in the day, and then you do the new trade later in the day.
So all of these options are basically expiring within 24 hours. They're European style index options. They settle to cash, so you can't be put the stock. That's a kind of a misconception that was out there for a while. I think people kind of get that one now, but so it's just whatever income you receive that day, you receive. It's in the pie, and the next day we reset and do the same thing again. So anytime any kind of cash sits in treasuries, more or less treasury type of fund, and each day the majority of cash is deployed to sell these slightly in the money, 1 day to expiry, 0 day to expiry puts.
Yeah. So it's always cash settled though, right? It's never, you can't
never be put the stock. Yeah.
Okay. So even if it's the same amount of contracts.
Yeah.
Still, okay.
Yeah. Yeah.
All right.
And then with SPYT and QQQT, it's a little bit different because we're selling, credit spreads. We're basically selling, short-term covered calls, and then, unlocking it using the longer dated option to try to capture the upside of the underlying index. And so that gives you the chance to, generate short-term income, which we still think is, kind of the right thing here. And the secret sauce, right? That like last minute erosion there that you're gaining from selling premium, and then the upside of the index itself.
Thank you. Jose, I told you, fund of funds.
Yeah.
That something you've talked about, or you're not even gonna wait until like there's more out there?
Yeah, we talk about it. I mean, the iron condor question was a good one. Haven't talked about that one before, but yeah, I mean, we talk about everything, every idea, all of the time. You know, so it's definitely on our whiteboard to think about, you know, funds of funds or even other fund of fund ideas, but nothing imminent on that. But yeah, we do think about it.
Okay. Yeah, because YMAX, I don't know if you follow YieldMax, but YMAX has had pretty good success that, you know, as a fund of fund.
Yeah.
Even though, you know, people complain about the expense ratio and they say do it yourself, but it's not that easy when you get to a certain amount of funds, right? Keeping it equally allocated.
Yeah.
All right. Could Sylvia tell us how to invest in SPY-T or QQQT? Why one or the other?
Just your preference, right? Do you want S&P 500 or NASDAQ? NASDAQ has, you know, there's, yeah, I mean, it's just your preference on which index you're going to invest in. Like the target income is going to be roughly the same, right? It's 20%. So then it's kind of your decision about upside of NASDAQ versus S&P, whichever one you want.
Okay. Was NAV decay expected when the fund was launched? I'm assuming so.
I mean, we knew, you know, we knew that if you're paying out a 60% annualized dividend, it comes from the NAV, right? But we also knew that, or we believe that investors would mostly reinvest the dividend. And, you know, when they looked at the total return, they would see, you know, kind of the impact of that 60% generated from options versus whatever happened on the plus or minus side of the index price appreciation. And, you know, your total return would be pretty decent. You know, interestingly enough, what people don't think about, like our funds actually have a lower, because of the income component, we're kind of a lower vol play as compared to just investing in NASDAQ and S&P. So you made the point before, right? Like if it crashes, like, of course we're going to crash, but we're going to probably do better, right? Because we generate the income. If markets just like we're kind of flat and not moving, we would do better because we wouldn't have any index decay. And we would be generating these high premiums on the div that you'd be reinvesting. But then if NASDAQ is taking off, like we're not going to capture that entire equity upside. So it just depends on what you want the product for. And for us, it's usually alternative income and not so much equity exposure that they're looking for.
There's another condor question and butterflies. So.
Yeah, I wrote it down. So something to talk about. Appreciate the
it's on the paper.
Yeah, it's on the paper for sure.
SPY-T, QQQT, and IWMT, are they all going to be 20% max yield? Yeah, so I guess
that's our goal. Right? That's our goal.
That's the goal.
Yeah,
no
I mean,
more
if there's
though, right?
volatility, then we could fall short. If there's so much volatility and, you know, we generate more, then it could potentially be more, but the goal is 20%.
But will you always pay out 20% on the money pretty much regardless of what happens?
I can never say always, right? Because if we generate 5%, it would be really tough to justify why we were paying 20%, right? So, you know, so I know you've talked to Jay before, but it thus far has been, you know, a very reasonable endeavor to generate that annualized 20% on all these funds, and so that's what we'll keep doing and trying to pay out. Yeah,
it seems like a sweet spot, honestly. At 20%, it seems
it is. If you go a lot higher, you definitely see that NAV decay, you know, come back into play. So
yeah, SPY-T, it's hard to. Because when I buy a lot of these funds, I buy in and then I only buy in when I can average down. I haven't been able to average down on SPY-T, but I have to treat it differently now because I guess it's been staying at a certain level and if not going up a little, which is pretty good.
Yeah.
I'm sure most people see that. Doc says you focus mainly on index related issues. Any possibility of a single stock ETF? I guess, you know, outside of the leverage funds
in the next week or two. There's a strong possibility. We have
possibility.
I mean, we filed for many single stock ETFs, and a few of them are now effective. And our goal is to launch a couple of them in coming days, actually. So pending some
Are these income funds?
approvals. No, they're just straight single stock ETFs.
Okay.
But they're not income. Sorry, fair point. They will be leveraged single stock ETFs. Yes.
Did you guys file for the Ethereum
yes.
ETF? Okay.
We filed for that. We're probably, there's already 2 of them out there. So, the ones that we're coming out with are first to market. I'll say that. Okay. They don't exist. There have since been filings for those. So I think, we'll hopefully be the leader in those launches. But coming days, you should see something about that from us.
And so I guess for the other side, are there any thought of single stock income ETFs?
It's always something that we're willing to look at and we're looking at, but what we've learned from this business, and it's when you're kind of like a second or third or fourth mover on a particular thing, it's tough to win. And so we would have to have strong conviction on the particular play. I think our brand has been in the index space and we've done quite well there. We're leaders there. And so we try to, be innovative within that space. Max has kind of taken the single stock, I would say, and done quite well with that too. And so, there's always room for new products, but I think our sweet spot has been these index income funds for now.
I was going to say, if you did go that route and it's a similar strategy, you're not going to be able to recruit Jay to run them.
Right. Yeah. Right. Competing with himself. Right.
Exactly. All right. Do you or any firms use AI in attempting to maximize performance?
We use AI to maximize our own employee efficiency and performance. We use it for marketing. We use it for, we use AI to do market research, to search what, you guys are saying about us and compile data. And, so we're big users of AI for different reasons. I would say we're probably a leader in that space. Most ETF companies are probably, not using AI as much as we are for certain things. I could be wrong about that, but it feels like we have some good innovation within our marketing company on the AI side. But in terms of like managing portfolios, no. But do I know people? Yes, there are many advisors who are starting to use AI within their practices. And I think, there are a couple funds, I think, I can't think of the name of them off the top of my head, but there's a fund in Korea, for example, that their whole thing is using AI to launch ETFs. So it's definitely out there.
Nice. It's not a question, but at least a compliment. Total return for these products have been pretty good if you bought on ex-dividend date. Will you be doing something with any of the digital asset crypto world? Well, you said the Ethereum. Others?
Yeah, I mean, we have some filings that are, I would argue,
Shiba Inu.
Like we have some filing. We have a MicroStrategy filing, for example, that's very relevant to crypto, I would argue. Again, it's something we're always looking at. But, in this business, so I think that there's so much opportunity there and there's so much interest there, and you see the assets flowing into these funds. But we are, in a competitive landscape with other ETF issuers. And if we're third or fourth to market for whatever reason, it's just hard for us to complete. Like we would have loved to have a Bitcoin ETF, right? But once you have Grayscale, BlackRock in there, it's just hard. There are business decisions you have to make. But
what about like a triple leverage Bitcoin ETF? That's not out there,
right? I mean, it would be tough to get approval for that, but
because they approve. I guess they're more likely to approve. They have like TNA who does triple leverage small cap.
Yeah.
Right? I guess they'll do the indexes more so than they'll do maybe a single.
They won't approve those anymore though. I was still there when that rule changed. So there's a derivatives rule now, and basically all of the funds that you launch have to pass a VAR test. And so basically it ends up being that most of these funds have to be 2 times levered or less. So all of the 3 beta funds are grandfathered in.
Wow.
So like all the funds from Direction and ProShares. Like they don't have to do anything, but they can't now launch 3 beta funds. And I know, I've heard people come on, publicly and talk about how they have ways to get to 3 times levered within an ETF. I think like under the 1940 Act rule, it's tricky. It's really tricky. Put it this way, it'd be really tricky to do a 3 times levered Bitcoin under that rule. Could you do it under like an ETN wrapper or some other, commodity pool type of strategy? Perhaps, but yeah, you can't really easily launch 3 times levered ETFs anymore. It has to be under a different rule, different wrapper. And people care. People seem to care. Like they like ETFs better than ETNs. And I mean, maybe that'll change, but they seem to.
You can't do a leveraged fund of an already leveraged fund, right?
Yeah, and so that's stuff that all of us issuers in the space have played around with, let's say. But I don't think there's a lot of appetite from a regulatory perspective. I mean, I can't like obviously speak for them, but I don't know if perhaps there will be more open-mindedness about that kind of thing, but it hasn't been there before. So
okay. All right. Jack says, any thoughts of lowering payout on QQQY JEPI to prevent from doing a reverse split as they approach $10? I'm assuming the answer is no, right? You're going to pay what the extrinsic.
Yeah, I think that's again why we launched SPYT and QQQT, like for those who are sensitive about the NAV and but we've heard overwhelmingly from a lot of our investors that like it ain't broke, don't fix it. We're always taking the criticism and going back and discussing whether or not we think there's something there and should we do something differently. But when we do our research and speak to kind of some of our investors, we often hear that there is interest in the products that are the high dividend generating products, and it's understood that at some point they could undergo reverse splits. And then there's interest in the target income products that don't have the NAV sensitivity. So it just seems like there are crowds for both.
Yeah, and now that you have both, it doesn't make sense to change one or the other because you have both options.
And by the way, it's not easy to change strategies in a fund either. So
it probably doesn't look good, right, from the outside.
Well, it's not that it doesn't look good. Like you can't just change it. First of all, you have to like go out and notify shareholders that you're going to do it. You have to talk to the regulators, get their approval on changing things, and all that is fine. But I think it's really hard to, these funds have been around for less than a year, so to change something now, I think with the thematic funds, for example, like if we've seen that there's a new theme, right, that is now relevant for one of our ETFs that has been around for 5 years, and we have all this evidence that this theme should really have been included, should really now be included because it's now guiding that theme, we will make a change, but we don't really see a reason to change the funds now.
Okay. Good. I say good to that. Stephen, what are the chances of an AI fund that follows both established and upcoming companies? Is that kind of like quantum? Or
I was going to say, look at quantum. That's quantum. Yeah, that's quantum.
Does maybe, do you think the name does it justice? Do you think having an AI in that would help it, or quantum AI? Or,
it's in there. Like if you look at our website, there's talks about what it is. It's AI, machine learning, and but
it's not like AIYY, right? It spits out in the name.
Yeah.
But
I also think I mean, this is too inside baseball, but there are these like new naming convention rules, right? And so if you're like what is AI? What is machine learning?
Yeah.
What is like all of these things are very related, but you have to kind of I think, it's a tricky thing, right? Like, does the company generate most of its revenues solely from practicing AI? I would say that Apple or, Microsoft also do other things more than 50%.
Yeah, I don't really picture Microsoft as necessarily that, but
yeah, exactly. So if anything, I would argue that like we try to be purists, but I don't know if it helps us or not.
Plus you're not really getting a discount there either.
No.
The upcomers. I guess here's maybe a softball question, right? Differences between QQQY and QQQT. We kind of talked about this, but I'm not sure if you want to make it?
Sure. So QQQY sells options that expire, within a day or less than a day to generate premium. So with that fund, you have a target of higher target distributions annualized, so 60 to the tune of 60% or more for QQQY. And QQQT is actually trying to target a set distribution of about 20%. And in that case, we sell covered call spreads. So one is using 0 DTE, 0 day to expiry options, and one is using covered call spreads. So
yeah, and then QQQT, since they're under the, I guess, income target, you kind of know what you get, right?
Yeah, you know what you got. Yeah.
Yeah. The other one, QQQY, some months are awesome, some months maybe not, some months in the middle, but
yeah.
All right. So I wanted to leave some time for you to ask questions. Did you need 10 minutes or 5 minutes? I know we have an hour, so we have 10 minutes to go.
Yeah, sure. I could give 5 minutes is good.
Okay, then I'll keep going with a few more questions before that.
Okay.
All right, you answered that one. Oh, this one says the sweet spot should be 25%. Oh, just for the QQT, but you don't think so, right? You think 20% worked out better.
Yeah, 20%. So when we think about these, like, could we shoot for 25? We could, but if we want to, like, when you're talking about a target income and you're all of this stuff comes with risk disclosures, like the word promise, guarantee, or whatever. Like, we never use those words. Nobody can, and nobody can predict what happens in the market. Like, look what happened this weekend, right? Like, different things happen that move the market. But I think with this case, our goal and intention and what we believe we can systematically provide is 20% annualized on these indices. Could we get it higher? We could, but then you're starting to go to QQQY territory, right? And then that promise of a more stable NAV is no longer the case. So it's just in terms of like what we due diligence wise, what we believe he can manage consistently. Yeah.
Not a question, but some love. Here we go. Big thank you for SPY T. As a semi-retired person, it has been a cool holding for me and my family. Blessings to you and your team.
Thank you very much.
Nice to hear some good comments. Right?
Nice to hear some good commentary. Yeah. It's great, but that's what it's for, right? Like these.
Exactly. Yeah. Like people retiring.
Live off the dip. Like you're retire on dips. Like you can retire on the dips from that, right? Like
yeah, exactly.
So.
Everyone can retire on dividends now. I assume the answer is no. He's asking you, so he would not have K1 issued.
No K1.
Easy one, right?
Yeah.
Happy Monday. I've heard talk of, here we go, reverse split for IWMY. I mean, since I think I asked Jay this for all the funds, but it's anything, basically when you get to under that $10 range, it kind of,
it's on your mind. Yeah. I can't talk about just, again, regulatory stuff, SEC, talk about stuff like that. But yeah, I mean, every issuer, I think, looks at reverse splits once the NAV on funds get too low. You have to preserve the value of the fund for shareholders. And,
they're 1431. QQQY is 1461. So they're both $4 up. So. All right, let's see what else we got.
But for that stuff, just like always look, again, inside baseball stuff, but if you wanted to look at like Edgar, like the SEC website, you can see when ETF issuers, file and notify the SEC that they're doing these things. And so then you can see it like before it happens, basically. And once that stuff is approved, issuers will put it out on their website and stuff like that. But sometimes I hear individual investors saying like, I don't like sit there and go to everybody's website every day and Schwab didn't tell me or whatever. So if you ever want to just see what everyone's doing, you can just look on Edgar.
Okay. Yeah. Would it be, I guess they'd be like a 2-for-1 split, to go back to 20 essentially, right?
Not necessarily. They can be like 2 to 5, I've seen reverse splits with levered inverse funds that were like 10 to 1. So,
but for your funds, I mean, they're typically around the $20 range, right? So you'd probably want to stay around there.
But there's no hard rule on that.
Okay.
Yeah.
What would you say makes your fund stand out more than the rest of the ETFs like yield max? So you got to say something bad about Jay.
Well, we both have the best trader on our products. We love Jay. They
Yeah.
love Jay. Yeah, I mean, it's
There he is. I don't know if you saw him, but he's a little Jay.
yeah. Oh, is that Jay?
Yeah, it is.
I haven't seen that before.
Oh,
That's
you
awesome.
haven't seen it? Yeah, it's his
No,
Bobble, his little
that's
Funko doll or something. But
that's awesome. They do single stocks. We do. We're index. So that's the big difference.
there you go.
Yeah.
Although he's having an index, no, I guess
Well, they have
yeah,
an index of their single name. Yeah.
inverse index, right? He's coming
Yeah.
up. Yeah,
Yeah.
but that's all you said he can allow. He can have.
Yeah. No, I don't have any. I think I give anyone credit for good ideas. I think that there are a lot of ETF issuers out there that have come up with some really cool ideas that people didn't see coming, and I totally give people credit for that kind of stuff. So
Yeah, this is a famous question. I think I probably
yes.
brought it up with you before, but people want to know if you'll ever, I guess, either with the current ones or new income funds, if you'll consider a different payment week.
We consider it, and we debate about it a lot, right? Because I keep hearing about the div wheel and that it's better to have them separated out and stuff like that. But I don't know. It's something we consider it. Yes, we'll consider it. We haven't done it yet, though.
Yeah, just it seems to me the fourth week is lacking. So that's like the sweet spot. So there is like hardcore income investors who all
week though. Oh no, because we actually distribute in the first. I see what you're saying. Yeah.
Yeah. They want to pay out the fourth week. They want to use someone in each week, right? So I think like you're the first week, yield max second week, I think, and then like I think FEPI's maybe the third week. So
yeah,
you guys are the big players in the space, right? So the fourth week is like waiting for someone.
Okay, that's good to know. Write that one down.
Yeah, it's a bigger thing than you would imagine.
Yeah,
you figure monthly was enough, right? Like just the fact that they're getting paid monthly is more than the norm. So
yeah.
All right, so we're at the 57-minute mark. So did you have any questions that we could ask the community? And then
yeah, I would love to know, is there a preference, target versus the 1 day to expiry funds? So is there Jeffy versus SPYT, QQQY versus QQT, curious of that opinion.
Okay, so
what is the biggest, the second question is like, what is the biggest reason that you wouldn't invest in our funds?
Oh, that's a good question.
Like expense ratio, performance.
The same person answered 3 times target.
That's awesome. Okay.
Yeah. I mean, I could tell you on QQQY, it's the visual, right? They look at the price and the chart without the distributions and they see this, right? So
yeah,
that's the biggest problem. They don't look
it's such a hard thing for us too, because this is something, and maybe you guys have good feedback on this too. This is just something we've been trying to figure out. Like, how do we I've had investors send me, snapshots of their portfolio and they're telling me like, I'm down 11%. I'm like, well, you can't be down 11%. Based on the dates that you bought this, you're up, I see that you're actually up 13%. Like how do we have such a big disconnect? And it's obviously adding back the div, right? So I don't know. We have to clear that up so that people can, I see nav.
Well, that's why like channels like mine and others, people,
they're great.
They're doing good now because people, they're missing that, I guess, because maybe they're not reading in detail. No one wants to read a prospectus for the most part. I know.
So yeah.
It's so they'll look at the website, I'm guessing, and then even that, they probably skim through that. But yeah, it's hard for them, because these are like QQQY. That's like no other, right? That came out first, like boom.
I know.
That's aggressive, right? So
yes.
But people. They jumped in and they ran away, and now they're jumping in, like you said. So it's, but it's kind of like settling out. So we want 507% share price appreciation and 40% dividend.
Me too.
All right, they're going to work on that. You'll charge a 90% expense ratio on that, though, right? Yeah. Would like higher yielding 60% plus dividend. Well, NAV guaranteed. Yeah.
Yeah.
Wouldn't be nice, right? iShares are making a move into the high yield option index ETFs with expense ratio of 0.25%.
Yeah.
I don't know what they have, but
Weekly
I mean, I
pay.
think in the beginning people were complaining about that, the expense ratio, and then when
Yeah.
they kind of realized what they were getting paid, they're like, oh, it's not a big thing.
Yeah. And I actually think for this one, like the amount of, this is an actively managed traded fund, like to the question that came up before, there's no, of course there's a model to for checks and balances and things like this, but there's no, like, it's not a push of a button every day. There's actual active management in these funds. Although we're really clear that we're doing the same thing, we have a methodology, someone actually has to trade it. So, whereas I think some of the other funds like out there, don't require as much work.
Actually, this is a good question. I think you said you're coming out with the MSTR one. Are you doing a bull and a bear?
Can't both. I will say this: both of them are effective. Check our website every day for the next few days.
Can I check now?
And you'll see what our new launch. You'll see what our new launches are. So we're pretty. Yeah, I mean, there's going to be there's a lot of hype about that, right? Because a couple other ETF companies have filed for that fund. We're super excited about the idea of single name leverage stocks, particularly when they're volatile and their names like MicroStrategy, which is really like, it's the sweet spot of AI and crypto, and crypto crashed and now it's kind of climbing back up. And if you have a nice trend, I mean, it'll be a super interesting trade, I think, if we get to bring it to market.
Sorry, Jay.
Thank you, but I don't have a doll like Jay does, so he might be prettier. Actually,
you're gonna have to get a doll made.
Please don't make one. Yeah. I'm scared.
Well, he has a man bun, so
yeah,
it can't get worse than that. So,
in real life, Jay does not have a man bun.
No, I know.
He's
I don't know if you saw, we did the closing bell with him, so I was able to meet him.
Yeah, well, you have to do a closing bell with us because that's coming soon. So,
is it coming? All right.
Yeah, we're gonna do some stuff hopefully with NASDAQ in the next couple of months. So
nice, and then we'll have the.
And Jay will be there too, I'm sure. So.
We'll have the Jersey Trio. Here we go. All right.
Right.
Did you have any other questions for the community? And they don't. We don't have to wait. You don't have to wait for the answers now. You can obviously look at them later. It's up to you.
No, look, I always appreciate we always appreciate the information about like what isn't working, what do people want to see that doesn't exist, and like again, use AI to kind of like scour what you do, what people say on Reddit, and all this kind of like. So we're really actually interested in feedback.
Yeah. So like you said, so you want to know.
Feel free to let us know.
Yeah, the good and the bad, right? You want to hear the good and the bad of all the funds, I guess, right?
Right. Or if you have questions, I mean, again, like I gave the example of that client, like I can take that spreadsheet and add the distributions back in for you, so you can actually see what your return is. So no panic if you see something down 11% and we're saying it's whatever it is, like we're not lying, we can prove it.
Yeah. I do the weekly update.
If there's any questions about performance and stuff like that, you can reach out to us.
Okay. All right. So I just want to thank you again, Sylvia, for coming back on to the community interview. I'm sure, I know I appreciate it and the community does as well, for answering the various questions, easy and hard. So just, thanks again for coming back. And any final words? I know you said MSTR is coming.
Yeah, thank you for the business. We're probably coming out with 3 funds pending. Definitely interested in your thoughts on IWMT. If we get feedback on that and the masses are asking for it, we'll be likely to get that out sooner than later. But yeah, thanks for listening to me. Thanks for the business, the interest in our funds, and even the the comments about why you don't like them. We appreciate all the information. So.
All right. Thanks
All right.
again.
Thank you.
All right, have a good one.
Thanks. You too. Bye.